Welcome to this month's Explainer, where we're going to break down the powerful market surge that kicked off the new year. January was a really fascinating month with some surprising shifts, so let's jump right into the numbers. So, if you had to boil the entire month down to just one single story, one headline that truly defined all the action, what would it be? There it is, a massive 8.85% gain, and that return came from emerging markets, making them the undisputed star of the month. This signals a huge shift in investor sentiment, and it was largely driven by a weaker US dollar and, that growing optimism around China's economic reopening. But here's the thing. This huge performance wasn't some big global phenomenon. What we actually saw in January was a pretty dramatic split on the world stage, a real tale of two very different markets. For months, even right through the end of last year, the story was all about the dominance of U.S. markets. They were leading the way, no question. But January? It turned that entire narrative completely on its head. The leaders suddenly became the laggards, and a new frontman stepped right into the spotlight. And wow, the contrast was just stark. The performance of emerging markets at nearly 9% completely dwarfed what was happening in U.S. markets, which were hovering closer to 1 or 2%. This wasn't just outperformance, it was a total blowout. And here are the numbers behind that picture. You've got the MSCI Emerging Markets Index that just rocketed up by 8.85%, while the S&P 500 posted a much more modest 1.42% gain. This kind of difference really suggests a significant rotation of capital, with investors starting to search for better value outside of the U.S. Okay, so now let's see how this global risk-on feeling played out a little closer to home. How did all that positive momentum translate to the South African market? Well, the good news is that local investors also had a really strong start to the year. We built on that upward trend from late 2025, and South Africa saw solid, positive returns across most of its major asset classes. It really shows that investor confidence is still pretty robust. And yeah, the local performance in January was positive right across the board. I mean, every major domestic asset class ended the month in the green, which is just a fantastic way to kick off the year for South African investors. So let's break that down a little. Local shares, they led the way with the strongest performance. Bonds also delivered a very solid return. That was followed by listed property, and then you had cash, which, provided its typical, stable, modest return. Okay, so with these distinct trends in play, you've got booming emerging markets and solid local returns. The natural question for any investor is how you position your portfolio. Let's take a look at how different strategies performed against their benchmarks in this kind of environment. The key takeaway here is pretty clear. Models with higher allocations to international and local equities generally outperformed the more conservative strategies in January. It just makes sense, right? This approach capitalized on that risk-on sentiment we've been talking about, where investors are more willing to embrace those growth assets. Looking back is useful, but the key question for every investor is always about what comes next. Was this just a one-month blip, or is this the start of a durable, long-term trend? And that really is the key question for investors now, because while the global economic picture looks pretty constructive, everyone's going to be watching a couple of key signposts to see if this new market leadership has legs. So you'll want to keep your eyes on two main things. First, upcoming inflation data, which will tell us if these price pressures are genuinely easing up. And second, communications from the central banks, both the US Fed and the SARB. We're all looking for clues on the future path of interest rates. Are they sounding hawkish and aggressive, or more dovish and maybe open to pausing these hikes? So the big takeaway is that January might have been more than just a strong month. It could be the first page of a whole new chapter for global investing. After years of U.S. dominance, we could be seeing a really significant and lasting shift. It leaves us with a provocative question. Are you positioned for this rotation?